Hi, this is Tom Wheelwright, best-selling author of Tax-Free Wealth and CEO of Wealthability. Let's talk about the good and the bad news of the new proposals for estate planning. Okay, first of all, let's do the good news, shall we? The good news is no capital gains at death. That is really good news. That's not in this current proposal. It could still come, but it's not in the current proposal. Number two, no tax on transfers. Now, this one has some limitations, but as a general rule, we were looking at transfers into partnerships being taxed and all sorts of nonsense. And that does not look like that's going to happen. Okay. These two, I think, were pretty solid on this. So that's good. We're going to retain our basis step up, it appears, and at least under this proposal, and no tax on transferring in or out of a partnership, that kind of silliness. Okay. Hopefully they won't come up with a new proposal on that. What about the bad stuff? There are some bad things, okay? One is defective trusts. Now, this is only a little bad. Here's what this says. And up till now, you've been able to transfer an asset, say you're an ownership in your business or real estate or even stocks, out of your estate. And even though it was out of your estate, you could still pay income tax on it. Those are called the defective trust rules for grantors. Those under this proposal would go away, which means that if it's out of your estate for estate tax purposes, it's out of your estate for income tax purposes. Okay. There's a change on valuations when it comes to stock and marketable securities. If you transfer marketable securities, you will not get a discount. All right. Is that a horrible? No, probably not a horrible, but it's good to know, right? This is a good to know. So some good news, quite frankly, really big good news, assuming that doesn't change. And a couple of limitations, but really not horrible. One more is a reduction on the exclusion. So instead of 11.7 million for most assets, it would be down to 5 million. So that's a compromise we thought we saw coming in order to not get the capital gains tax. So all in all, not so bad. We got a couple of good things, a couple of modifications, but all in all, not too bad.